Welcome to this presentation on the benefits and features of Forecast 5, our budgeting product. So what we'll do is just walk through the features that make it such a valuable tool to accountants and business owners in the assistance of creating budgets, cash flows, forecasts and projections. So the first I will cover is a little bit of the background under Details tab, which give us forecast name, description, a start month, choices for a new forecast to select the currency, and that. We provide and support multiple currencies, multiple GST or tax rates, arrangements for payroll, PAYE options, forecast other options as to how cash flow is managed, whether it's evenly during the month or at month end, and parameter defaults for when we create a new record, which all simplify and ease the speed and make it easier to make it forecast. So what we'll do is we'll give this forecast a name. We'll just call it simple sales, and we look at it. Our standard template has generated certain sections, so we were able to create more sections, and those sections can have different types, a sales section or a cost section. Within a section, we're also capable of having folders, and these folders can go down to 5 levels. And that was a way of grouping lower level accounting information to be reported at different types of levels. Right. So within a folder, we then budget at a record level. So the record budget could be sales of product, and this can have sales name, it can have details there as to description. We support the option for general ledger code and a project and external code. These are available on export and facilitate import of information. The record itself is given a record type, and each of these types dictates certain methods and means of how the record behaves. So obviously standard income would go into the debtors creditors control, or debtors control, and the standard bank. Separately invoiced income, that permits us the option to actually specify a separate or different bank account if we wish to have more bank accounts and we have foreign currency bank accounts. So we go add a record, we create a new bank which is US dollars, and we specify the currency as US dollars, and what we should then do is specify the exchange rate to make life a little more logical at 0.85, and now we can come back to the record which is set up, and we can determine which bank account and put it into the right currency and budget this at 1,000 US dollars and have the money hit their bank account. Alright, that is dealing with the types, and an accrued prepaid record obviously creates the accrual and prepayment recognition in the balance sheet. Now within the record we have methods and means of budgeting. So we've got manually enter, which is key in a figure either in the all tab or at any record month level, whatever, and that will calculate that there. But we also support other methods which make it easier. We have profiles, which are ways of saying weekly, or put in the total for the year and it will spread it according to that week. And you can, up in this menu option, create new profiles which can be a factor of numbers, so they can be used as divisors. So that's a total of 21. We can now select that sale profile. If we put in our 21,000, this record now immediately calculates based on that rate. Right, additional methods we now allow is calculate from units. So this is where items are selling at a price, and we can dictate the number of units being sold per month. Other methods include a percentage of sales, a percentage of costs, etc. Memo, which allows us to create a memo record specified here and then use that. We support a formula calculation, which can be entered as simply numbers or other records multiplied by themselves times 50, because at this stage we hadn't got anything to extract against and that. But if we had another record, That formula would enable you to access the sales record and similarly create results. Under the sales record, continued versions would include us sales units, where we can use sales units from another one, from employees, which allow us to create and extract employee generated revenue. So if you're a services based firm, you can base it on the number of staff members that you are paying wages to. We then also have, finally in that area, a hot link, which allows us to source or add an Excel style of import where we can actively look up the a spreadsheet. We can select a forecast, and from that forecast we can select the record level information, and that will bring that information into here for reporting. Relative to cost sections, we have a section type cost. The records are then created, and we're able to then allocate different types of costs. So we have costs, accrued prepaid cost, a stock type record which models the balance sheet stock and the purchases, wages type record, separately invoiced costs and stock, which do both the same functions as cost of stock, except for they isolate them and identify them separately on the cash flow and the balance sheet. So if we just take a simple cost, we get a whole range of options similar to what we've just seen, where we can actually have costs as a percentage of sales, 50%. Now what we didn't cover this earlier is under the cash flow functions, we can designate different ways of receiving the money. We can manually enter it. We can just say we're getting $10,000 a month. We can use days credit, and based on a setting it'll be 20 days from month end or evenly during the month. We can take up a payment profile, which allows us to split the payments into percentages received, so smoothing or modeling, or we can hot link. So this is information we can now determine on there. So this is just cost of sales, right, and we will have that payments there. So in addition, we might add a wages record, which will take a wages type. And this allows us a few options here. We can manually enter the wages into PAYE. We can use a profile, which allows us to split like there. Or we can actually use what we introduced as called an employee group, which allows us to say that we might have a number of staff, so 3 staff, all working a certain week time on an average pay rate of $25 an hour. We can introduce bonuses, pension schemes, so we can bring the KiwiSaver down, or any other things that we can define that, and we can call this the warehouse staff. Okay, and you'll see here that that's automatically calculated the PAYE because we've actually supported the payroll tables in here, and that's the payroll there. So advantage from that. We will now go back to our sales record. We'll change this to sales 2. We'll generate, calculate from units. We will have $1,200 a unit. We will sell 1,500 units a month. All right. Now what we might do is come back into our cost records, put in a record, create a stock item, so we have stock, and the effect of stock is that we actually now are able to say use the sales units, select the record, we buy it for $625 a unit, and we now also build our stock, so we can either calculate a days on hand or batches or similar like that. And across the right hand side we again have our cash flow. So what that will do is say we've got generating 30 days stock on hand. We have no opening balance sheet yet because we haven't entered it. We do support the entry of opening balances. It has immediately bulked up the stock to create enough to have enough of the days on hand, 30 days. Overheads, we're able to create records for power as an accrual record, which allows us to create firstly as an accrual, or select as a prepayment, enter the invoices that we want to the profit and loss at $1,000 a month, but we get the invoices quarterly and we pay them in 5 days. So we get a split because we're evenly during the month. We may also have a rent record, which is prepay. We've got there, we'll have it as a prepayment, and we pay $1,200 a month at 0 days. When we receive the invoices daily. There. This gives you an idea of some of the functions. So within that, we can also support the fixed assets area. So the fixed assets allows us to create and model fixed assets. Let's say plant. And we're going to buy one of these on the opening month. And along here, we're going to depreciate it at straight line 25. Or a diminishing value, which is a reducing balance method, or similar. We will also have a loan, which we have borrowed as a term loan, so it's a calculated loan. It's set up to start, it's new, it's going to start in May, and it's going to be for 24 months, and the balance is $10,000, and we're paying 8.5%. Our repayments are automatically calculated. We support compound, simple, or interest only. And we have payment frequencies in advance or arrear and different styles of payment types. We have an area for all other types of records, other assets and liabilities, and each of those can be various types of assets and liabilities that you may have, such as current asset liability, loans, shareholders' loans, or similar. Having gone through this process, what we will now wish to do is probably enter our opening balances. So we have support for entry of the opening balances, both the historical profit and loss and the current balance sheet. You can export that, paste it into Excel and re-import it back in, or if you've got an existing accounting package, drop that to Excel and export and map it in like that. We support that mapping in with the general ledger codes. That comes on there. Right. So what we're now looking at is some of the other features that you may do. So we will firstly save this record, and we need to give it another name. So we use this one, so unique. Okay. Now we can actually do such things as what if. So if we go into sales, our what if multiplier up here, we change that to 1.2, and what that now do will increase all of the display information. So $40,000, we show the what if, it will take it up to $48,000, and all of our reports, cash flows and others are calculated based on that multiplier. So that can then lead us back to making a projection, a rolling forecast. Another primary feature we have is the entry and recording of actuals. So what actuals allow us to do, by clicking the Start Actual Budget, it creates a facility for us now to enter our actuals. So we click the Enter Actuals, we go to our profit and loss, and our budgeted figures are shown, but we might say our actuals were 55,000 and 178,000, and stock was actually down a little bit, 90,000, etc. And you can enter that information. You can also export this, map it with the general ledger code, and re-import it. So in this point, what we've now got is an auto balance, which obviously we do. We'll say yes to that. Now what we will do briefly is look at the reports. So what we're able to do is click on the Reports tab. So what we're now able to see is our profit and loss variance report, showing our actual of 178 against our 1.8 million, and the variance that's there for both this month and the year-to-date original. We also have, if we'd entered cash flow information, we'd put in our debtors, we would see that our receipts from the budgets, etc., varied where we are there. So what we then have, what you have in that is a very powerful tool for the generation of accurate profit and loss budgets, cash flows, balance sheets, projected positions. We're able to save this, save as, do there. Other supporting information is we have the ability to create consolidations. So under the new menu, we can have a new consolidation, which is the ability to consolidate or add many of these individual forecasts together to form a group. So you can forecast each, for example, retail store, consolidate it into a region, bring that region up into a sales territory, and then consolidate that to group by adding consolidation other forecasts at each level, such as administration and overhead running costs, etc. To do that, and that can be done in currencies, things from there. So with that, at this stage, we'll look to close off this presentation. Hopefully that has interested you enough to encourage you to go towards our webpage, which is on forecast5.com. Bring that up. Where you can download a trial period version, or if you're in New Zealand based, you can contact us at navigatorsoftware.co.nz, phoning 820-9960, or email sales@navigatorsoftware.co.nz. Thank you very much.